Meantime, let's get back into this a very interesting conversation. We have Eromosole Aziba on the phone now doing the phone call. There's always a way through, isn't it, Eromosole?
Yes.
We just keep bypassing, whichever way it takes. Okay, so you were talking about how the Treasury bills auctions and the FX auction in January, in the final week, were part of the consideration for investors as to, look, where do I make money? Where do I put my assets in terms of what inflation is doing to me, the tight macroeconomic environment that is driving some Nigerians right now on the streets of Lagos, say they're protesting the economic conditions of the country?
Yes. Like you mentioned, that's entirely true. That's what played out as we saw a poor performance from the equities. Investors sought for value in the market, and it appeared that investments in fixed income, like I mentioned earlier, especially treasury bills, seemed the most viable in the sense that there's a reduced level of risk, and you also get an assured profit. So this was what drove the increased interest in the treasury bills market that we saw, and we believe this will continue in this month. I mean, on last week, on the first day of February, at the treasury bills auction that was held, there was an oversubscription of about 248%. A total of 242 billion was on offer. But in terms of subscription, there was over about 500 billion worth of what investors were of offers from investors. And we can see that this same trend has continued, and we don't expect to see any significant change in the short term.
But as far as the earnings season is concerned, none of the big banks have so far reported. Are you looking into when this, at least the Tier 1 banks will come in with the numbers?
Yeah, well, we expect the Tier 1 banks to start to release the results from the tail end of this month and the beginning of March. like the trend that was noticed in 9 months results, where a host of companies across sectors posted poor performances. We saw for Tier 1 lenders, we actually saw an improvement in performance, broadly due to gains from forex evaluation gains, and we believe this could also drive their performance for the full year results. So for the Tier 1 banks, we expect to see a relatively good performance, I mean, compared to what's going on across other sectors. And then we might see some investors buying interest in some of these stocks.
For 1 minute or so, give me your view. It's about we've seen some of the numbers from the industrial sector. Doesn't look like a nice story, and from the oil retailer that we've seen so far, from 40 Oil, from flour mills, from 7-Up, it doesn't look like 2016 was a good year, as it were. So do you see this reflecting on the books, on the numbers that the big banks will post?
Well, like I mentioned, majorly what could potentially happen is that there'll be a spike in their non-performing loans, but the impact on their books could be offset by the fact that in terms of they should report some increase in their forex evaluation of gains, and in terms of looking at their foreign denominated assets, given the deterioration in value of domestic currency that we've seen. So in naira terms, we should see the value of these assets appreciate, and we believe this is what will keep their books healthy.
A quick one. And finally, is this a bullish week or a bearish week from the equity side of things?
Well, there's a chance that we could see an improvement in performance this week due to the fact that we had the also index decline on 4 days of the 5 last week, so we could see some bargain hunting by investors this week.
Okay, thank you very much. Eromosole Aziba, investment research analyst from Afrinvest. Thank you very much